by the end of this video, you'll be able to understand what are the 10 ways, proven ways in which you can take profit. Whichever strategy you choose to apply, you can make sure that your risk to reward ratio is good, then you apply it. So what is a good risk to reward ratio? Bare minimum 1:1 to be safe, minimum 1:1.5. You can go up to 1:2, 1:3, which is a common risk to reward ratio. For forex, we just call it target price, right? But for stocks, you will have to use a sell limit order. Okay, first strategy, okay, is you can TP based on previous swing low or highs. So if you are shorting today, you would TP at the previous swing low. So if you are buying today, then you would TP at the previous swing high. So for example, let's say the price goes like this and you decide to buy over here. Okay, and also assuming that there's a previous very strong support over here, so you're buying on a retracement trade, for example, and you will put your stop somewhere below the very strong support. You will set your target price in the most recent swing high, which is over here. And like I said just now, you need to have a good risk to reward ratio. So this kind of trade is really good because you're only risking this much and your potential profit is this much. So even if you lose again and again and again, it doesn't really matter because you know that eventually your profits is going to cover all your previous 3 to 4 losses. So don't cry. So the second strategy to set your TP target is you always have a fixed risk to reward ratio. So for example, if you buy over here and you decide to set your stop loss below a major support, for example, and then you count how many pips is it from your entry to your stop loss, and you count, it's about 30 pips. And your trading plan tells you that every single time you open a trade, your risk to reward ratio has to be at least 1:3. So if you count, okay, my entry price is from here to here, 30 pips. So 30 times 3, my TP target should be how much? 90 pips. Okay, so this is your TP target. So it depends on your trading system. Sometimes, some people they are going to set it as 1:2. Some people they are going to set it as 1:1.5, 1:1. And some people combine this with ATR. So if their ATR tells them that based on volatility, please set your stop loss at minimum 20 pips. So this meets the criteria and hence you can proceed with that. But if your ATR tells you that, okay, based on volatility, this currency pair is super volatile, super unpredictable, just like your X, has to be 40 pips, then you cannot have this kind of stop loss. You gotta set it at 40 pips. Understand what I'm saying? So if you have watched my previous video where I talk about support resistance, I talk about supply and demand zones, you need to know that there are invisible support resistance. There are also obvious ones. The one that catches most retail traders are the invisible ones. You know what I'm saying? So if you have a supply zone over here, supply zone, you cannot set your TP target above the supply zone because you realize that the price will go up, hit the supply zone and then come back down, and then you did not hit your TP target. Then a lot of traders be like, how come there's no resistance but then my... So if you have a supply zone over here and you're buying in this trade, you gotta set it slightly below the supply zone, give it a little bit of buffer so that the price has room to go up. So third strategy is you can set your TP target before the supply and demand zone. And the fourth strategy is end of the week TP. What does this mean? So for us traders, we trade from Monday to Friday, right? A lot of traders, they don't want to hold their trades over the weekend. So what they'll do is that they're going to TP on Friday night. Doesn't matter if you're a stock trader, forex trader, this applies, because when you hold your trade over the weekends, you would be subjected to weekend gapping, market gapping. This is a risk that a lot of beginners don't understand, because if over the weekend when the market closes, there's a major event and you bought over here, you set your stop loss over here, example, let's say during the week the price closes over here. Over the weekend the bad news happen, is released. Guess what? The price is going to gap down and open over here on Monday. So your stop loss is not going to get executed, and hence you're going to lose more than what you want. So if you're scared of weekend gaps, just get out so that you won't be subjected to this risk. The next TP strategy is a time limit TP strategy. For this strategy, you need to backtest a little bit. You need to understand the behavior of your stock or currency that you're trading, okay? Because for certain traders, let's say they bought 3 days ago, and after 3 days, the price is still hovering sideways, going down a little bit, then going up a little bit, then going back down. So 3 days has passed. For some traders, they'll know that after a certain amount of days, if the price doesn't hit my TP target, I'm going to close it. Chances are, if it passes a certain requirement, let's say 3 days or 4 days, and the price hasn't touched my TP target, chances are it's not going to work out. So let me just get out. So for this strategy, you need to understand at what point in time will the trade be considered useless. Some traders, they open a trade on Monday and then they'll hold it to Friday. If this stock doesn't hit my TP target by Friday, I'm going to close it. So you can kind of merge strategy 5 with strategy 4. The next strategy, you have to, especially if you're a short-term trader, you have to take profit before major news and announcement, because you know that when there's a major news announcement, things are going to get crazy, right? In order for you to check where the major announcements are, you can look at economic calendars. There are a lot of economic calendars that you can use, but the common one that people use, which I think is very user-friendly, is Forex Factory. Okay, so 1 hour or 2 hours before the major news events, meaning the high impact events, you need to take profit, you need to get out. Okay, for stock traders, you need to get out before earnings announcement. Now, earnings announcement, you can go to websites like Yahoo Finance. So when you go to Yahoo Finance, you will come across this term under it, earnings date. So make sure you take your profit before the earnings announcement, because what's going to happen is that the stock might gap up or gap down. So if you are lucky and you bought the stock, you're going to earn a lot of money. But if you're unlucky, you bought the stock and then it gaps down, from today onwards, your trading career has just ended. So the 7th strategy, you use this strategy if you are trading in a ranging consolidation market, meaning a sideways market. So you can set your TP based on the range. So when it comes to range trading, you can trade it in 2 ways. The first one, normally in a ranging market, you would have a very strong support resistance being formed. Okay, I'm talking about the not volatile ones, because the volatile ones, you cannot even find support resistance. So assuming that this is a very good ranging market, you cannot set your TP target right at the resistance level. So set it slightly below resistance, and you would again have a very good risk to reward ratio. This is what you are risking, and then this is your potential profit. Agree with me? What happens if the price breaks away from this range? Let's say if it breaks above over here, some traders, they are going to trade the breakout. So since this is no man's land over here, price never went here before, where do you set your TP target? So what you can do is that you measure the height of this channel, the average height. Okay, let's say it is 80 pips From the bottom to the top is 80 pips. So from your buy entry point, you project up 80 pips. Okay? And then this is where you put your TP target. So the 8th strategy is almost the same thing as the strategy just now, just that this one is based on a chart pattern. It's still the same breakout principle. So let's say today if you are able to identify a symmetrical triangle chart pattern and it breaks above here, over here, and you want to look for a buy, how would you set your TP target? So what you can do is that you can measure the height at the crust of the pizza. You know what I'm saying? At the end of this whole entire triangle, measure this height, let's say it's 50 pips. Then from your entry price, you project upwards 50 pips. 50 pips. Okay, then this is where you put your TP target. And also you have other very common patterns, right? You have double tops, which doesn't have to be the same height, but it has to be approximately the same height. Okay? Let's say you have a double top or double bottom, and it goes like this. You have a support over here, and then you have the neckline over here. It's just the same thing. You measure the height of this channel, and this will be your TP target. So the next way you can set your TP target is using Fibonacci. So Fibonacci, there are two main types. The first one is retracement. Fibo retracement. The second type is Fibo extension. Now some people use retracement for taking profit. I prefer to use it to enter on my trades. So there are many levels in Fibonacci retracement, but the significant levels which are good support levels are 50% and 61.8%. And you use Fibo extension to take profits, because sometimes when the price go to no man's land, where there's no support resistance, there's no supply and demand zone, then how do you know where to take profit? So if you entered into a retracement at the 50% level, you take profit at the 150% level. If you entered at 61.8%, then you take a profit at 161.8%. So why do I pick these two levels rather than 38.2%? Because this is another very significant. Can you just write properly? Because 38.2% is another Fibo level. So why don't I look at it? The retracement is just a little bit, then it's like not cheap enough, you know what I'm saying? So if I want to enter into a currency, I want it to retrace by a lot, but not by too much. But if you choose to enter into 38.2%, then where do you take your profit? Take your profit at 138.2% of the Fibo extension level. So when it comes to Fibonacci, you don't have to really use these numbers because these are the default numbers. There are some traders, they'll come up with their own numbers and then they will just enter based on those numbers. The next strategy is TP at a very strong support and resistance zone. So let's say you have entered when the price retraces to a very strong support level. Let's say you entered based on confluence of Fibo as well as moving average. Okay? And you put a buy order over here. Buy order, okay? And based on previous day price action, there's a very strong resistance over here. Alright, a very strong resistance zone. Can be due to many different things, because support resistance can be a fundamental support resistance, can be a supply demand zone. Like I said, you gotta set it below the resistance zone. So you put a TP here, depending on the currency pair, but on average 10 to 20 pips below the TP is a good buffer. Again, it depends on the currency pair, depends on the stock. And of course, with stock, we don't measure it based on pips. We measure it based on dollars and cents. This is just a rough guideline, okay? Let's say your stop loss is over here. You're risking this much to take this much. Then this is a good trade. So of course, there are other ways in which traders so-called take profit, but it's not really take profit. They would scale up their trades. They would also sometimes put their stop loss to break even. Some people would use trailing stop. So they wouldn't set any TP target. They're just going to use trailing stop. So the only way they can get out the trade is when they get stopped out. And remember this, putting your stop to break even can be less profitable as compared to just setting a TP, setting a stop loss, let the trade run itself. So there are many types of support resistance. I'm not going to cover in detail in this video because this video is meant for take profit. So I've done a course a while ago on this YouTube channel. I'll put it over here. You can go through it yourself slowly. Okay, so with that, I'll talk to you in the next video. Bye.